Do you like Nvidia given all that it's gone through in the last couple of sessions?
Well, it certainly is interesting that it would be denied today, especially since the other rumor that came out yesterday, along with the subpoena, is that Nancy Pelosi sold all her shares. So I guess if we really want to find out if it's true or not, we'll have to check out her portfolio. But as turn of the stock, as far as the stock goes, it was so overvalued, and we knew that, and yet Nvidia is definitely at the forefront in terms of chips and will continue to be so. So part of the antitrust suit, if it happens at all, really seems to be relatively unfair and somewhat political in that, there's reports that people are being forced to use the chips, and when I say people, companies, it seems to me that people still have somewhat of a choice, but it happens to be a superior product with a lot of development on the horizon. So what does that mean for the stock? Right now, we're out of it. Obviously, it's been an incredible year for Nvidia, so hopefully people made a lot of money and don't want to go chasing the volatility, so it might be a good time to be patient. But I also read recently that in terms of the valuation, it was still about 38% overvaluated based on the price of the stock when it was up at around 120, and that fair price would be around $87 to $90. And I feel that if Nvidia gets to that price, that would probably be a very excellent place to enter long.
Okay, and what about some of the periphery stocks? And I'm talking about the likes of TSM, which makes the chips for Nvidia, and of course the monstrous gains that we've seen in the Taiwan market as a result of that, making it, I believe, what was one point the best performing market in the world at 25% year to date. Of course, it's come off that given the volatility that we've seen this week. But are there any periphery stocks that you would play?
Probably right now in that space, no, not at this point. I think that the tech space has widened out a little bit to other areas, including biotechnology being one, although we don't think of that classically as tech. And as I mentioned before, some of the tech that's involved with the electric vehicle and the infrastructure and also the batteries themselves. So at this point, what we're seeing is a trend, right? We're seeing the fact that we've peaked out in tech in general and in the chip market, where we have the SMH, which is the ETF for semiconductors underneath the 50-day moving average. We have other areas, and in fact, broadening out areas over the 200 and the 50-day moving averages. And I think that might be a healthy sign. So in terms of trends, you have to say, we don't want the technology sector to crash, obviously. That will bring down everything. But as the market gets used to the idea of rotation, if it holds firm, if you want to be a buyer, depending on your time frame, some of this might form to be an advantage. Right now, we are sort of aside, as I mentioned, that we've gotten out of most of our tech stocks. But I think it's also a really good time to take a look at some of these other areas that have been out of favor because everything was all about growth, 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 growth. And it really is a lesson, and this is the last thing I'm going to say about that, it's really a lesson for people to understand how cycles work. Because nothing lasts forever, right? I mean, that's just the nature of the being. So we had this tremendous cycle up. It lasted for a very long time. Doesn't mean it won't come back, but for now we've kind of reached somewhat of a dormancy. And like I said, if it treads water here, probably good for some of the other areas. If it crashes, not so good. And if it rallies, we'll have plenty of opportunity to see that to jump back in.